I'm Christensen. I'm with Pathways Financial Credit Union here at AEP. I want to welcome you today and thank you very much for taking out some time for your lunch with us today. We have a little presentation today. We have 3 speakers. We have myself, we have Onofri, and we have Michael Spiellman. Today we're going to talk to you about your SMART score and more. This will cover your credit score and how to maintain and improve it with Pathways. Some of the topics that we'll cover today are: what is a credit score? What is a good credit score? What affects your credit score? What doesn't affect your credit score? What can hurt your credit score? The impact of bankruptcy. What businesses use credit scores? Free annual credit reports. How to handle disputes on your credit report. And what is a credit freeze and is it for me? And also we'll cover Pathways SMART score. I'll hand this over to Curtis, and he'll talk to you about what is a credit score.
So I want this to be interactive, so please feel free to ask questions, talk during this. This is not just me up here lecturing to you at all. We're going to make this a little bit of fun back and forth too. How many people know what their credit score is right now? Or at least have a good idea. All right. We're going to jump back to that in a few minutes, but I actually just asked you a trick question. So we'll get back to that. But everyone knows, or has at least heard what your credit score is. Everyone knows that you have a credit score out there. Everyone knows that credit scores are important when you're doing borrowing. There's a lot of other times when credit scores are important too. The 3 main companies that everyone should know about, or at least heard about once or twice in their life, is Experian, Equifax, and TransUnion. Those are credit reporting agencies. Those are companies that aggregate data from all around the world and collect that and put it together and actually house data. And that data is what is used to help generate those credit scores. So the 3 big ones you see, Equifax, Experian, and TransUnion, those are the ones that we generally hear about in the news. Equifax had a lot of bad news about them recently when they had that data breach. And we're still trying to figure out exactly how bad that's going to hurt us in the long run as far as identity fraud goes. But these are the ones that you hear about all the time, and they are out there for you. So what is a good credit score? We know credit scores are all over the place. 740, we hear that number a lot of times as being a great credit score. Credit scores are all over the place too. They can be anywhere from as low as 250, 350 is usually about the bottom, all the way up to 850, 900. Depending on the credit score that's used, it could be even higher than that as well. And that actually brings up a question. How many people know how many different credit scores there are out there in the country? Take a guess. Anyone have a good number? How many different credit scores there are? 3. It's a good start. Anyone else? No? Well, just to give you a clue, Pathways alone uses 7 different credit scores when we do stuff for members. We have 7 different credit scores out there. And that actually changes anytime. I was just using a couple additional ones I was testing out recently that we're not going to use. But the actual answer is that nobody knows how many credit scores there are out there because there's actually nobody tracking it. I can think of about 500 off the top of my head of different credit scoring models that are used in different credit scores. So a good credit score is actually going to be a little bit of a misnomer because it depends on what company is using the score and what score model that they're using is going to determine what a good score is. But for the purposes of this conversation, for the purpose of talking to people, these are good kind of general numbers to be looking at for a FICA score or for that general score out there that you would be talking about. But just to give you a heads up, I have one credit score that's actually backwards. A low score is actually better than a high score. So it just depends on how you're doing everything and how we're looking at it. And so that's why it's really relative. When somebody says I have a great credit score, I know what my score is, you may know what that score was for whatever company gave it to you, but you don't know what your true score is with the lender that you're working with right then and there, because it all depends on what score that lender's using. When I'm working with somebody who's borrowing for a car loan, I use a completely different score than what I use when I'm doing somebody who's looking at a mortgage, because there are different profiles. I'm looking at different risk factors for that person, and so I want a score that most accurately represents that borrower. What's important to know about scores is that they're really just a base number to help us factor out how we're going to price a loan and how we're going to work with that number. It's not that A-all, B-all piece. So let's talk a little bit about what affects your score. And really this is about talking about your credit itself and helping us build a credit score. Each scoring model is going to use these pieces in there. And I know this is kind of small. I hope you can see a little bit better on your handouts. But there's several different pieces that really go into factor and determine what your credit score is. And they're in different orders of importance. Number 1 and number 2 are really tied, and that's payment history and credit capacity. Depending on your age, younger people are going to have a little bit more on the capacity side than the payment history. Older people, people who are better established, I should say, it might be a little bit more the credit history. It's going to kind of go back and forth. And then those two are going to go back and forth depending on which scoring model you have. But payment history, pretty easy. Everyone understands what payment history is. If you don't pay your bills, you get a bad credit score. Pretty straightforward. Credit capacity is a little bit more murky. This one is looking at credit cards, revolving credit, anything that you borrow where you can borrow over and over again. The amount that you borrow, the more you borrow, the lower your score is going to be, because the higher risk you are, is what the way that the credit agencies look at it. So if you have a credit card with a $1,000 limit and you borrow all $1,000 on that card, you have a lower score than somebody who has a $1,000 limit but only borrows $500 on that same card if everything else is equal. And the reason for that is that you're more risky, you're more likely to charge off that loan if you're getting towards the limit on that credit card. The credit bureaus actually look at two different things. You have two different portions of this. They look at individual credit cards, and then they look at all your credit cards together. So if you have 10 credit cards, each of them with a $1,000 limit, but you've only borrowed $1,000 on one card, maxed it out, your overall portfolio looks good because you've only used 1/10 of that of all your limits. But that one card is maxed out, so that one card is going to affect your score as well. Does that make sense to everyone? So you got those two different portions in there, and those are really the big important ones. Payment history, just to kind of circle back around to that one real quick. Payment history is last 2 years payment history. That's all that affects your credit score, is last 2 years. If you have a late payment from 7 years ago out there on your credit report, it's not affecting your score anymore. It looks bad, it's annoying to see it on your credit report, but it actually isn't affecting that score anymore.
I have a question.
Yeah.
So, working with the insurance companies are really, really interesting. So, like I had surgery and I had bills coming in all over the place. I get a bill, but I don't get my EOB for a month or two. So that bill's sitting out there saying, you're late,
Right.
but I'm not paying it because, so is that affecting my credit history?
That's a great question. And no, it doesn't, as long as they don't report it to the credit bureau. Okay, so if you're working with your insurance provider, and they are just saying, you got to pay this, but they're not actually sending you to collections yet or reporting you, that's the biggest thing. Once they say that they're going to report you or they're going to send you to collections, that's when it could affect your credit score.
Okay.
So, my wife just recently had surgery and we're dealing with the same thing, and it's nerve-wracking because you're waiting for the insurance companies to settle everything out, and they're always disputing something out there because they want to pay this amount and your company wants this amount. So I understand that as long as you make sure that the bill is not going to collections, that's the only time that it becomes an issue. And actually, going to that, a lot of the newer credit scores out there don't factor medical collections nearly as much as they used to. They understand we all are dealing with medical crisis out there, the fact that medical insurance is so expensive and you have to pay co-pays and everything else now, it's getting more and more complicated. Most of the newer credit scoring models don't even factor that or care about it anymore. Real quick, length of credit history, as I said, that's a really small one out there. That's nothing we can deal with. I mean, younger people have less credit than older people do. They really want to see somebody ideally with about 35 years of payment history. So it's about the only thing that's good about getting old is you get a better credit history profile. But types of credit you have at your disposal, that's really having a good mix. just ideally, you want to have a little bit of everything. You want to have a credit card or two out there. You want to have a home mortgage or installment loans. You want to have a car loan. You just want to show that you've had those different kinds of credit and that you have that ability to pay those back well. But yeah, the type of credit, the credit mix definitely looks at that. The history looks at that, and that can affect it. I'm going to pass it along to Kim to keep you guys going and get you out of here on time. She's going to talk about what's not affecting your credit score.
There are several things that do not affect your credit score, things such as your debt ratio. This would be the amount of debts that you have. They don't necessarily affect your score. The income that you make does not necessarily impact your score. It's how you make those payments. Length of residence does not affect your score. Length of employment does not affect your score. Debit card use does not affect your score. This is a big misconception. Some people think of their debit card as a credit card because it may be processed as a credit card, but it's not an actual credit card. It will not reflect on your credit report. So a debit card does not affect your score. And then most importantly, your score will never factor in personal information such as race, gender, religion, marital status, or national origin. Does anyone have any questions?
Just to touch on what she said, these aren't even collected. They're not part of the credit report. I can't get that stuff as part of the credit report. So I can't see what your income is. I can't see how long you've been living at a specific residence. Unfortunately, most residence and employment information on credit reports is inaccurate. It's old and out of date. So they don't go in and they don't affect anything when we're looking at that.
It's a general question. How do the credit bureaus make money?
That's a good question.
There's lots of ways. Well, Curtis will address some of them.
They charge a lender every time we pull your credit score.
Mhm.
So every time we order a credit report for a person, we pay actually a bunch of different fees associated with it. But needless to say, they make money on every single time a credit report is pulled and used.
Are they regulated in any way?
They're extremely regulated. They're regulated by the CFPB, the same way as every lender is out there, every large lender. They are a very strong lobbying group too, which means that they have a lot of influence over the way that the laws have been written. But they are highly regulated. They are a public company, or they're a regulated industry, just like AEP is regulated with the energy side.
What can hurt your credit score? There are several things that can hurt your score and decrease it. Things such as missing loan payments. If you miss one payment, 30-day late on your credit report, it can cause anywhere from 90 to 110 credit score decline. So that's something to keep in mind, just simply making those payments on time every month. Maxing out credit cards, we talked a little bit about capacity earlier on, limiting your capacity to borrow. So the higher your balance is to that limit, it can decline your score. Alternatively, we also talked about closing credit cards lowers your capacity to borrow. I have seen people in the past have excellent credit, 800 credit score. They ran into some money or getting ready to retire and they paid off all of their debts, closed out everything, so nothing was open and their score declined into the 500s. So it can definitely decline when you pay off and close and you no longer use your credit score. Shopping for credit, that was another thing. You're out shopping, Kohl's and all these other credit card companies and stores offering you the savings. It can affect your score when you have more credit opened, or if you're out there shopping for a car over several months and they're pulling credit at different places, that can affect your score as well. One great thing to keep in mind for that, if it's for an auto, is you could go to your credit union or bank and get pre-approved, and you have that one inquiry out there, you're all set and you're ready to go, and that avoids some of those unnecessary inquiries. And then opening up numerous lines of credit in a short period of time. So that's something Chris also touched on earlier, can affect your score. Having more revolving loans in relation to installment loans. Revolvings would be your credit card, open-end type loans. Closed in installment would be your auto loans, your mortgage, things that have a term set on that versus open and revolving. The next next, we'll turn it back over to Curtis for what about
Happy.
bankruptcy? Thank you. There you go.
So, any questions about what can hurt your credit score? Or what, so far, how we make it up, where we get with everything? Just remember, really, credit score is all about just determining how likely you are to default on your loan. That's really what we're doing with the credit score, is we're trying to look in the crystal ball and figure out how likely that person is to default. Usually it's within 90 days is what their default rate is, so they're trying to prevent somebody from defaulting within 90 days of a loan. But, you know, we're looking at that as a whole. Bankruptcy, it's the big bad word out there. We hate to see that. I hate to see that as a lender. But it is something that some people have to deal with, especially people who get tied up with a bunch of medical bills. I mean, if your the other company doesn't settle in the long run, I mean, it might be something that has to happen. People sometimes have to file bankruptcy. Just to clear their debt, get straightened out again, get everything in the right spot. There's a bunch of different ways that you can do bankruptcy too, and we're not going to go into all the different stuff with bankruptcy. That's a whole different class that we can talk about for a long time. But bankruptcy is a last effort to help get you back on the right foot is basically the idea behind a bankruptcy. I can't get my debt in line, I can't get back on right, I can't get going again. I'm going to start over and move forward. Filing bankruptcy will dramatically affect your score. The score is going to go down. You're going to be considered a very high-risk person for a while. Interestingly, though, a lot of credit cards are going to start sending you offers for new credit cards as soon as you file for bankruptcy. Because once you file for bankruptcy, you can't file again for a certain number of years, and so they know they can make a bunch of money off of you in the meantime until you can file again.
Because those credit card offers will come with a very high
interest
rate.
Yes. I'm hoping nobody in here ever has to file bankruptcy, but if you do, it's definitely something you can get past. And life does move on. Once you've had a bankruptcy, about 4 or 5 years later, you can usually apply for a mortgage, get a new house if you had to. We start working with people who have had bankruptcy, depending on what the cause of the bankruptcy is. I've done loans for members right after they got out of a bankruptcy, if it made sense. So bankruptcy isn't the end of everything. It does affect your score. It affects the interest rate you're going to pay on loans, but it's not a major end-of-life thing. It's not going to kill you for getting loans out there. But the important thing to know is that bankruptcy is going to report on your credit report for quite a long time. So once you have that out there, it's going to report for a long time, and it will be factored in your score for quite a while. So who uses credit scores? I'm going to pass this over to Mike
right.
to talk about that.
Thank you, Curtis. So who, Nick, uses these scores that we got out there? Well, the first 3 or 4 are pretty obvious. Banks, credit unions obviously use them. Credit card companies, mortgage lenders, pretty much easy to see how everyone uses them along those lines. But it always surprises me that some of the other companies that are using your credit score, insurance companies, you alluded to that a little bit in the back, they'll use it not only to determine how well you'll pay your premiums, they'll use it also to determine the risk factor to the insurance company. What they've seen is a correlation between credit scores and frequency of claims and amount of claims. So they'll actually price your credit premium or your insurance premium not just based on your history, but also based on your credit score. About 90% of the insurance companies in the country use credit score as a component in their pricing model. So if you have excellent credit, you may be paying a little bit less on your insurance premiums than someone who maybe has never filed a claim but has bad credit or has credit not quite as good. So an interesting use of it. Car dealers, when you go look at a car, they usually, one of the first things they'll do is ask you for your driver's license, and they'll disappear for a few minutes. Well, they're running your credit score. They do that for a couple of different reasons. They want to see if they're going to be able to finance that car before they waste a lot of time showing you every car in the lot. And they also want to know if they can let you go out on that test drive by yourself. I think that's a big part of it. If you have a good credit score, they're probably going to toss you the keys, say, see you in an hour or so. Take your time, relax, come back, tell me how many cars you want to buy. If your score is bad, you might have 2 salespeople in the car with you. But they do use it for quite a few things. Landlords, when you rent a home, or you rent a condo, they're running a credit score. Cell phone companies, utility companies will use credit scores on consumers. And this one here really surprised me, home alarm systems. I switched over to ADT about a year and a half ago, and I could not switch alarm companies until they ran my credit report. Now I have no idea, I'll be honest, I have no idea why they had to run my credit report. But to switch from Stanley Security over to ADT Security, they wouldn't let me off the phone until I ran my credit. Now, I froze my credit. We'll talk a little bit about freezing your credit afterwards. I actually had to make a phone call and freeze my credit, or I would not have been able to switch alarm companies. To this day, I'm not quite sure why. I guess it's because they put a lot of equipment in your house. They want to make sure you pay for it if you quit paying your bill, I guess. But it is an interesting use of credit that I had not seen before.
One quick thing, the Fair Credit Reporting Act requires that anybody who's going to pull your credit score tell you before they do. So you have to give the person permission to pull your credit score before they can do that. It may be in small print on some piece of form you signed. It may be verbally with the lender.
And that's hard scores.
Yeah, but anytime
You
they're
do a
pulling
hard
your
pull.
score, you're going to know about it, or they're not supposed to be pulling your credit report.
Good point. Something that Curtis alluded to earlier about the Fair Credit Reporting Act, that this is one of the benefits we received from it, is we can get a free copy of our credit report. Now, it's important to realize you don't get a copy of your score. The credit bureau just gives you a raw copy of your actual credit report, which are very interesting to see. How many of you guys have gotten a free copy of your credit report? So a good number of you, well, about half. It's not hard to do. You can do it online, you can do it by phone, you can do it by mail. They make it pretty easy to do. This is a website address right here, annualcreditreport.com, and it walks you through the entire process. Now, because each credit bureau is required to give you up to one a year, and there's 3 major credit bureaus, you can actually, if you stagger them a little bit, you can actually do one every 4 months. Now, trust me, if you do once a year, you're probably fine. But if you want to look at it every 4 months, you certainly could, just by rotating. You can also get a copy of your report anytime if you're ever turned down for a loan. So if you apply for a loan and get turned down because of something on your credit report, you can get a free copy of your credit report instantly. Or not instantly, but with no caveat to how many times. Also, some employers will run credit reports on people. If you work in the financial service side, I guarantee you, before you got hired, you had your credit report pulled. If you were ever to be turned down for a job because of something on your credit report, the employer has to tell you that they turned you down because of that, and that again gives you the ability to pull the credit report from any credit bureau that you want. There's also insurance scores that you can get from LexisNexis, and this kind of goes over your claims history. So I have the address there, that if you ever wanted to see your claims history on insurance, you can pull that up and see that right there on LexisNexis. We'll turn it back over to Curtis to talk about disputes.
Has anyone disputed a credit item in this before? Couple? I know I have. Anyone else? Mike? Yeah.
Yes.
Disputes are a nice part of the Fair Credit Reporting Act. It's something out there that we can use if something is incorrect in your credit report. Disputing an item is not a bad thing. It's something we do when something is reported inaccurately. The credit reporting agencies are pulling information from lenders. The lenders are humans that are typing in information and reporting stuff. People screw things up. The important thing is that you check your credit report, and if you see something wrong, you do get it fixed, because you don't want it just sitting out there forever. If you ever see something that's inaccurate on your credit report, you go to the credit reporting agency, and they all have an online process to dispute something out there. So you can go out there, there's usually some kind of a form, you fill out the information, and then us as a lender, we would actually get that dispute from the credit reporting agency. We have to respond to it within a certain time period and provide an answer, either yes, the information is correct, or no, it's incorrect. And then after we respond to it, you actually as a consumer have the opportunity to further challenge it or add a comment to it if you think it's incorrect. So there's a whole actual process that's set out with how disputes are happening. One important thing though is the disputes are also abused. You hear all these credit repair companies on the TV, on the radio that say, we fix credit scores, we make them better. Really what they do is they spam all the lenders out there on your credit report with disputes, trying to get them to not respond in order to get things removed from your credit report. Because if we don't respond fast enough within our prescribed period, it's just automatically deleted. And that's all that these companies go out there and do, is they just spam you, and they try and hit everyone with a bunch of disputes and hope that the lenders don't respond to it fast enough. Lenders have figured it out, and everyone's pretty good at getting things in on time, so it doesn't actually help. And sometimes it can actually hurt the person more, because if you dispute something on an old line of credit that hadn't been used in quite a long time, and that actually updates the credit report as part of the whole process, it could make an old late payment become a current late payment because of the way that the activity is reported and updated. So some of these companies actually do more harm than good. Try not to use those companies out there. If you hear them offering that service, talk to somebody else first, a professional. There's a lot of great nonprofits out there that can help out with that as well before those for-profit companies. Any questions on disputes? Pretty straightforward. Hopefully you don't have to use it, but if you do, like I said, it's very easy. It's easy to go out there on any other websites and start the dispute process.
Thank you, Curtis. And I'll share a real quick story. I got crammed once by AT&T. Lovely. I worked with AT&T probably for 3 or 4 years to get that removed from my credit bureau. And I think it's part of their business model. They make it really difficult to do something like that. So one time I went to the Equifax website, and they have a little place you can type in like one paragraph and dispute a claim. And I put it in there, said I got crammed. I paid them what I owed. I didn't pay what they wanted me to pay. And like 24 hours later, I get a note from Equifax, an email back saying, we agree, we took it off your report. Now, I felt like a fool because I'd spent 3 years. I can't tell you how many hundreds of hours trying to work with AT&T to take this off. And it took me about 5 minutes with the credit report dispute. So that's kind of a good side of that. I'm not sure it would always be that easy, but my experience was it worked out really well. So should I freeze my credit? Personally, I froze my credit about 4 years ago. I will tell you that if you're not borrowing a lot, it's probably one of the smartest things you can do. If your wife likes to open instant credit a lot, it won't work. But I will tell you, in 4 years, I've only had to call and unfreeze my account twice. And that process isn't bad. What is the advantage of a credit freeze? Basically, if your ID gets compromised, if you have someone trying to fraud your account, if you freeze your credit, you're not totally immune, but you're pretty well protected. Because most people that are trying to compromise your ID, they're trying to access your credit. So they're trying to open up instant credit. They're trying to apply for a loan under quote unquote your name and get the proceeds. If your credit's frozen, that lender will not pull your credit report. You'll say this report is frozen, and they'll have to reach out to you and say, will you unfreeze your credit so I can do it? That stops that type of scam, that type of fraud right in its footsteps. So again, it's very, very easy to do. It does not affect your credit score. It doesn't affect your getting your free copy of your annual report each year. It will require you to unfreeze your credit temporarily if you're going to apply for a loan. Quite frankly, if you're applying for a job, if you're trying to rent an apartment, if you're buying insurance. As I mentioned earlier, if you want to get a new alarm system for your house, you will have to unfreeze it. It's darn simple. I just refinanced my car loan, thank you, Curtis, at the end of the year. And Curtis, I applied online, our online website, real easy. It took me like about 2 minutes to apply for the loan, to transfer it over. Curtis called me and said, hey, your credit's frozen. I made one phone call to TransUnion, that's the credit bureau we use, and gave them my code. They unfroze my account. They go, do you want to unfreeze it for 24 hours or for 2 days? I said 24 hours is fine. Emailed Curtis back, he ran my credit report, I got refinanced my car. So that whole process took me about 2 to 3 minutes. So it's a little inconvenient, but I tell you, it affords you a ton of protection that quite frankly, when Equifax had their data breach, they provided consumers an 800 number you could call and they would provide you ID protection insurance. I called the number as I was talking to the lady. I told her my credit report was frozen. She goes, you don't have anything to worry about. You don't even need the insurance. You're fine. So that tells me that that is really a smart thing to do. If you're really getting a lot of credit where you know you're going to be buying houses, cars, applying for credit quite a bit, it does add a layer of inconvenience. If you're not borrowing a lot, i.e. apply for new credit, it really makes a lot of sense. Yeah, you can actually freeze it online or by phone. And I think you can actually do it by mail as well, but a couple different steps. There is a cost. It's pretty minor. It's like about $5 to $10. If you have been a victim of ID theft and you have a police report, you can actually get it done free. For $5, I just did it. I did it at all 3 credit bureaus. It probably took about 5 minutes to freeze at each one. But it's a good step to take. Again, a mild inconvenience. If you ever want to apply for a mortgage, apply for a car loan, you do have to unfreeze. They can unfreeze it for various periods of time. If you know you're going to be shopping for a week, you can unfreeze it for a week.
I think the freezes are good for people who are not using the score much. I personally don't subscribe to the freezes. I don't use them. So it's kind of different attitudes towards that. I know Mike is less likely to borrow than I am now in my stage of life. So it's kind of a stage of life thing, also the cost associated with it. If you have homeowners insurance, if you're a homeowner, generally homeowners insurance includes credit ID theft as part of one of your losses that they will cover. So it's something to check into as far as your homeowner's insurance policy or your renter's insurance policy. That's generally something that's included nowadays. It's really going to be kind of back and forth. I've seen the backside of it. Mike is smart. He wrote down his number. You have to have a password or a PIN number.
Okay. One of the benefits we do offer our members is that we do a soft pull each year for all our members, and we share their scores with them. We do that in a couple different ways. One way is we put that online. So if you go to home banking, you can actually go up to one of the drop downs and say, I want to see my credit score, and it pulls it up like this. Now this is a service that our mainframe computer provided for us for the last 3 or 4 years, but they're not going to support this after March. So we're probably going to go back to the way we used to do it many years ago, is we'll just mail all of our members their credit score once a year. And that's a good way to keep track of your score, know what it is, and we're getting ready to do that probably the next month or two.
Mm-hmm.
So if any of you are interested, if you're a member, look for that in the mail. It'll be coming probably in the next couple months.
And the one that we actually pull, just because we've talked so much about different scores and everything, we use it's called the FICA 08 Auto Enhanced Score. But what it basically means is that it's a score that's geared towards people who are borrowing consumer loans for car loans or getting ready to purchase a car, because that's really the #1 loan that we do in our company for people on a daily basis, is helping them finance a car, helping them refinance a car, or helping them to purchase a vehicle. So that's the one that we do the most often, and that's why that score is out there the most, because that's the one that you're going to have pulled most often in your daily lives.
Well, you guys have been a great audience, and you really got all your questions out during the presentation, which is great. Yes, ma'am.
You may have answered this and I just didn't catch
It's
it,
fine.
but you're saying when you freeze your credit,
Mm-hmm.
and a card that you already have, can you still use that?
Oh, yeah, yeah, absolutely, no problem there at all.
Okay.
My wife will attest to that.
I actually have a good question for somebody who may want to freeze their credit, because I'm from a consumer side, because I don't even know. Let's say I freeze my credit like I have, and I do want to apply at a place that may not be Pathways, which wouldn't happen because I'm going to be applying at Pathways. But if I was to do that, do I have the capability of inquiring where they intend to pull the score from, so I can just choose that one place to unfreeze, or do I have to unfreeze all of them just to be safe?
You have to ask the company which score they're pulling from.
And you can do that.
Well, any lender, I mean, we use TransUnion as our primary score for consumer loans, but then if we're doing a mortgage, we have to pull all 3 per regulations. So it all depends. You'd ask the lender who they use.
Cool.
TransUnion is the biggest credit reporting agency in the Midwest. Equifax is the biggest on the East Coast, and Experian is the biggest on the West Coast. So it kind of depends on which lender or where they're based out of, which score they use the most often. Good question. Anything else? If you have questions on the side or you want to ask something that's not group oriented, feel free. I have my cards here too if you want to call about anything. So I'm more than happy to help you with anything you can.
Well, thank you very much for spending your lunch hour with us. It was nice meeting you.
And if you haven't signed up for that you were here, could you please do that? We have a little sign-up sheet going around.
Thank you, guys.